What's up everybody? Welcome to the Stocks channel. My name is Cory and today we finally saw a bullish day across the board in the indices and we did push through some critical resistance levels. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we did see SPY going up 0.9% and we did see SPY break and close over that critical resistance level at 420. Remember, yesterday we did test both critical resistance and critical support intraday, and we did get a confirmation bounce off of that support level. Now the benefit of the Dow always goes to which side has the trend, and remember SPY is in a full bull trend with all of the moving averages stacked to the bull side. So I always say the trend is your friend, and that does help push the price action higher, so the bias is still on the bull side, and remember you want to be a bull in a bull market. We still have a lot of risk coming into the middle of June, and we do have that CPI data coming out on June 10th. But right now, if we're being objective and we're following the price action and the trend, we still see a bullish stock market in the S&P 500. All of the moving averages are still stacked to the bull side. The price action did break and close over a critical resistance, and we're now getting price action closing back over a positive sloping 5 EMA. If we start to see this 20 simple moving average continuing to curl up and get more and more positively sloping, that will only be building up momentum and it will become more and more bullish to push the price higher to new all-time highs. So right now we did get a brand new closing all-time high price on SPY, and we do have validated price targets above at 423, and if we break above 423, it will validate the next price target right around 425. So right now the price targets on SPY are 423 and 425, and we will now have downside support at the previous resistance level, which is right around 420. So the first warning sign that this breakout was not the real deal is if we start breaking and closing below 420, because we usually do like to see some follow through on a breakout of resistance like we did see today. So if going into next week we start breaking down below 420, that could mean this was all just a bull trap and a false breakout. Now, however, we don't see any sign that the moving averages are about to roll over and the trend is about to reverse. So that could still be a buy the dip scenario, which we will be getting into in the very near future. So right now, just remember there's definitely risk going into the middle of June because we do have the CPI data and the FOMC meeting, and we don't know exactly how inflation is going to affect this market just yet. The price action and the trend are implying bullish, but it's also possible we're pushing to new all-time highs before those events, and those are sell the news events, and then we see the selling afterward. So be disciplined and be patient, and if you're taking on risk in this market, just make sure you understand your exit strategies. That way, no matter which direction the market goes, you know exactly what you're going to do. If you're entering long at these levels, from today's close to the 425 price target is only about 0.75% upside. So don't be taking on a ton of risk for 0.75% upside going into a very risky event into the middle of June. I'm not saying be scared of the market and don't trade the market at all. Just have a very strict strategy and a very clear defined exit strategy if the market does turn against you. On the NASDAQ 100 triple Qs, we also did get that bullish price action break above that critical resistance level at 334.6. So that does validate new price targets above for the triple Qs at 336 and 339. We still don't have the benefit of a full bull trend on the triple Qs just yet because that 20 simple moving average is still below the 50 EMA. However, that 20 simple moving average does seem to be curling back up going into a positive slope, which is a good sign for the bulls. And it will be a very bullish event when that 20 simple moving average, if it does cross back above the 50 EMA. So right now on the triple Qs, you're looking for support at previous resistance at 334.6. And then we do also have support right around 332.5. If the triple Qs start breaking down below about 332, that could be a bearish sign that we're going much lower and we could be retesting support at 329. But right now, this is definitely a bullish breakthrough. And if we see follow through on the price action going into next week, that could mean that the triple Qs try to push to a brand new all-time high. Again, it doesn't go without risk because we still have CPI data coming out next week. And if we do see too much inflation in this market, that will be a bearish event for the tech sector and we could see more selling. So be disciplined and make sure you have a very clear trading strategy. Or if you're not sure what to do, just wait it out until after the middle of June and we'll have a much more clear picture on the market. On the Dow Jones, we went up a little over 0.5% today and we got right to that resistance level at 348, but did not break and close above it. That will be a strong resistance level, but if the Dow Jones does break above it, we will validate the next price target at 350. Critical support on the Dow is now at 343.7, and below that, we're looking for 341.7. On the Russell 2000, we went up 0.43% today, and we did close above that resistance level at 227, but we did get rejected at the resistance trendline level at 228. Right now, the Russell 2000 is trying to get back into a full bull trend, but that 20 simple moving average hasn't yet crossed over the 50 EMA. Don't forget, we still have a gap to fill down here at 223.75, and we could come down to fill that gap before trying to break out and go back into a bull market. So the upside resistance levels are going to be 228, and above 228, we're looking for 230 and 233. On the Arkk ETF, we went up 1.94% today, and Arkk did close over that resistance level at 109. Right now, Arkk is still in a bear market, making lower lows and lower highs, and it's still trading below the 50 EMA. Look for the next critical resistance at the previous level at 112.68, and then if we break above that, we're looking for resistance at the 50 EMA right around 114.5. Your downside support levels on Arkk are now 109, the 20 simple moving average at 107, and then we do have support at 106. If we start breaking below 106, we're looking for a possible double bottom attempt off of 97. On the VIX, which is our fear indicator, we did see the VIX getting crushed today, going down over 8%, and the VIX is now trading at 16.43, closing well below that support level at 1665. So remember that a low VIX means low fear, and that does mean that we are likely going to continue to melt up to new all-time highs. When there's no fear in the market, that means there's nobody selling, and if there's nobody selling, the market will likely continue to drift higher. Remember, we have a bullish trend with bullish price action, and we just saw bullish breakouts above critical resistance as the VIX is breaking down below support. So overall, this is a bullish breakthrough in the market, and if we do see the price action confirming this breakthrough on Monday, that will mean that we are likely starting a new bull rally, and that could mean that we are going to brand new all-time highs. On gold, we did see a bounce off of that support level today, which was right around that 20 simple moving average, and we see gold getting rejected right at the 5 EMA. However, gold still has the full bull trend, and it does look like we're going to continue to trend up higher towards our price target at 1923. We will still have downside support right around 1876. On silver, we bounced today, and we did maintain a price action close back over the 20 simple moving average, and silver did hold on to the bullish trend. So look for silver to try to break out yet again right around 27.9 to possibly start running to our next price target at 29. Support levels on silver are right around 27.7 and 27.6. On Bitcoin, we're currently down about 5.4%, and Bitcoin is continuing to struggle around this $39,000 resistance level. Remember, Bitcoin is consolidating in this wedge, and it's either going to break out above 39,000 or it's going to break down below 35,000, and that's going to give us the direction that Bitcoin is likely going to go. To the downside, we would be looking for support at 30,000 and then 27,000. And to the upside, we would be looking for resistance at 43,000 and the 50 EMA right around 45,000. If Bitcoin does break out to the upside and starts closing above 43,000, that will be a bullish indication that the selling in Bitcoin is likely over and we could be going back into a bull market. But don't make any expectations or any assumptions, and just wait for a confirmation breakout in either direction. On Amazon, we went up 0.6% today, and Amazon is still struggling around that resistance level at 32.09. Amazon did look like it was going to break down and start heading towards 31.38, but we did see a slight bounce in today's price action. Right now, all of these moving averages on Amazon are very close to being stacked to the full bear side. We just need to see the 13 EMA crossing below the 20 simple, and we haven't yet seen that. The upside resistance we need to see Amazon breaking above to get bullish would be right around the 50 EMA at 32.45. So watch Amazon to either break above 32.45 or to head back down and retest support at 31.38. On Tesla, we went up over 4.5% today, and we did close over resistance at 594. Tesla did find resistance right around the 20 simple moving average around $600, and it still does look like Tesla could just be bouncing after getting a little oversold yesterday, and it's still possible we come back down and retest the support level at 546. Remember, Tesla below 546 is looking awfully bearish, and it does mean we could be going back down into the high 400s. But right now, the price action looks like it wants to try to retest resistance right around that 20 simple moving average. And if we do break back above that, you're looking for resistance at 626 and the 50 EMA around 644. Remember that Tesla is still in a bear market, so you don't want to be getting overly bullish on a stock that's in a bear market. Be very picky about your entries and exits, and if you're accumulating for the long term, just be prepared to dollar cost average down if it does go lower. On Apple stock, we went up 1.9% today, and Apple was one of the reasons we saw a very bullish day in the triple Qs. We did see Apple breaking out of the downward trend line, and that's very good news for the bulls because Apple was in jeopardy of going into a bear market, but it is still holding up above that critical support at 123. So right now, 123 is holding up, which means we're not as likely going to see 119, and we are still trying to break through that critical resistance around 126. If Apple can get back above the 50 EMA, which is now at 127, it could start building up a bullish trend and Apple could go back into a bull market. That would be good news for the NASDAQ 100 and the triple Qs and could help push the stock market higher. So right now, this is just a one-day breakout and we need to see follow through, but it is starting to look good for the Apple bulls. On the financial sector, we went up 0.25% today and we still see the financial sector closing above the 5 EMA and holding on to the very strong bull trend. On the industrial sector, we went up 0.32% today, closing back above the 5 EMA yet again and still holding on to the strong bullish trend. On the healthcare sector, we were up 0.32% today, and we did see the healthcare sector bouncing off of the 50 EMA. However, the healthcare sector does not yet have a bull trend, and it needs to get back above that 20 simple moving average to do so. On the energy sector, we went up 0.67% today, and we do see the energy sector closing back above the 5 EMA and still forming a bullish trend, which does look like the energy sector could continue to try to push higher. So jumping back over to the S&P 500, you can definitely see a lot of bullish breakthroughs in the stock market today. We saw our market moving stock Apple breaking out of a downward trend, and we would like to see follow through on that going into next week. We see the S&P 500 and the NASDAQ 100 closing over critical resistance levels, and we see the VIX absolutely getting crushed, closing well below support, which does imply we are likely going to be seeing new all-time highs. However, that does not go without risk because as we go higher in the stock market, risk increases, and we're also coming into the middle of June where we will have a lot of volatility potentially with the CPI data and the FOMC meeting. So just be very disciplined and understand that there is risk coming up in the next couple of weeks. And even though it does look bullish in the stock market, remember the stock market loves to take the stairs up and the elevator down. So just make sure you're protecting yourself and you're not getting too over leveraged at these levels. But overall, the price action is bullish and the trends are bullish, so we just need to continue to stay objective and stay on the right side of the market. Remember, on the Stocks Channel Discord, I'm giving you intraday updates and analysis to help you navigate this market, and I'm bringing lots of new trade ideas to help you crush this market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link below. So happy Friday, everybody. I hope you enjoy your weekends, and as always, I will see you in the next episode.